Hi folks, Nick here, recapping the day, March 24th, 2015. Red day across the board, disappointment for the Bulls for several reasons. They started out the day exuberant, but then the scoreboard, let's start with that, minus 0.6% on the Dow, same for the SPX, about half as bad for the NASDAQ, and only 0.1% down on the RUT, which is small caps. So small caps fared best. However, all candles were ugly, and I'll show you that. Let's start with that, actually. All candles and the ranges are ugly as far as, let's look at the SPY first. The SPY, I'm going to zoom in a little bit so we can see the candles. They're important. This is today's candle. It opened up here. They tried to run it to here, and then they closed almost exactly at the low of the day. Not a pretty candle. That's two ugly hammers in a row. Probably more to come, usually when you see that. At least it's a far cry from reaching for this level, which we thought it would reach up here. Remember that? That was part of the thesis that I said, let's short it. That's good for the short. All right, and is it headed to here? Maybe, and if so, let's hope it holds. Or will it bounce off of that as support? That's the next question. Volume is a little worse than yesterday, a little heavier than yesterday, so they're probably building up gumption there, the bears. How about the NASDAQ? Is it any better? Nope. Same exact ugly candle. Opened here, ran up to here on the morning exuberance for the report, and then closed at exactly the low of the day. Not good. Volume also a little bigger than yesterday, so they're growing. Here we have a wedge to talk about, this one. And it better not break, because usually when this breaks, it'll probably get to here, if it breaks. So it hasn't broken up yet, but it is a potential. So keep that in mind. Okay, so that is the small cap. The small caps is coming next. This was the NASDAQ. IWM represents the small caps. We talked about this wedge before. Rising wedge, tightening in range, usually is if you break out from the top, you have some way to go. If you break down from here, you're probably also going to hit that level here, just eyeball. And but it hasn't happened yet, so it could revert right back up there, because see how it's trading trend. However, it is an ugly candle, followed by an ugly candle, preceded by an ugly candle. Why? They opened here, they ran up to here, and then they closed almost at the low. Not pretty. And the good thing here is they matched the prior high, so it did not have lower highs. Okay, it did have lower lows, but no lower highs. And as the other ones had, well, this one had, a little better than that one. Okay, so in any case, those are the ranges. Today, the heartbreak came from the fact that we had good economic reports on the new home sales in the morning, and then boom, sold off. This is the S&P, this is the NASDAQ, this is Apple. You can see they all look the same, and this is the small caps. Right here, the small caps decided that, hey, they're going to break out. I did see an inverse head and shoulder, loosely interpreted, with a target to here, and it hit it almost exactly, but then decided, okay, you broader indices, you're not joining me, I'll give up too, into the close. Oil, neither here nor there today, no biggie. What is the biggie today is Google. And it had a headline. The headline was that they hired a CFO. So now people are hoping that new CFO means that now they can actually give back capital, meaning they can do buybacks, they can do some dividends. That's just hope. But it is a headline stock. I don't want to stand in front of it. It's up 2%. Another one, Twitter. Oh gosh, bam. Up 6 and change percent based on just technicals. And let's go there. Twitter. Look at this candle. That is unbelievable. Now we get to this green, and I think they were aiming for it, and if they get there and they close above it, they're forecasting new all-time highs. I think it's all-time highs. I don't remember now. Maybe not. Yeah, well, anyway, they're highs, recent highs. Let's call them recent highs. Oh, no. Okay. So now the breakout potential looks a little better for you, right? This area right here had been an area of failure, this area. So I call, yes, it has room from here to 55 maybe. I did take a few short positions in it, but much small because I said it's low conviction, so I'm not risking a lot of money. 6% up, wow, that is amazing. What's it going to do for an encore? Okay, so back on the intraday moves, I think the markets were saved by the bell. Same with Apple, especially with Apple. This position here, this pattern here is bearish because you run and then you can't. And then you go to try to mirror it and you like miserably fail. It looks like a miniature version of this. So right here, the bulls are tired. They go down. But saved by the bell. Same thing with the NASDAQ. They run and then they miserably fail several times. And then if had they not run out of time, down. Same with here. Okay, so where to go from here? I do have a few points. The variables, the most important ones. Why? Why did we drop? I always say I need to find out why. It's bonds, rates, currency. Okay, those are the biggies. Fed obviously is the underlying factor in all of these. So bonds today ripped, and they're in the breakout mode. We've talked about that breakout mode. Remember this orange formation? Again, a wedge. See, it comes up often. And if it breaks out, and it did today, this should be the target eyeballing it. And so that's the potential of TLT. That's bad news for markets, although from time to time markets, I've been telling you, they ignore it recently. But today they did not ignore it. They went down. The TNX, which represents the 10-year rates, under 19. So now we're back to 1.88, what the 10-year rate yield is. It's just crazy. Back in the, anyway, a big setback. And this usually is bearish when the rates drop. All right, so back to the general idea of what's driving this. Currencies also, if we want to look at the dollar, it looked stronger across the board, and especially against the euro. So people have been saying strong euro market rally. Well, today it was not the case. All right, so these are the big major factors. So we're still, every rally we did, like yesterday or whenever we had a rally, it's based on something bad not happening. It's rarely now being on actual good things happening, okay, like a good fundamental thing or a good catalyst. So it's all about just rallies out of the blue. Okay, so I did have a few stories to share with you today based on questions and observations. But before I do that, I want to make a comment in markets in general. Today's strength came from momentum stocks, what we call MOMOs. That's perceived froth. So it could be good news, bad news. Bad news is that they don't tend to hold their greens very well, meaning they go big one day, red one day. But it's an indication that risk appetite is still alive and well. And I can also confirm that from seeing the VIX being red when markets were red. The VIX was like -4 or 5% this morning when markets were just barely flat to a little bit green. Like, this is overkill. And then it took all day for it to go green. Even when markets went red, it still was red. So people are ignoring. They have blinders on. So careful with that. All right, so a few names I wanted to talk about. First of all, Twitter. Let me bring this in here. Bring it like that. All right. Today, it looked like they had this in sight, and I had drawn this earlier today, and it looks like they came at it, kissed it, crossed it a little bit, and then closed a little bit below it. 51.50, I think where it is after market, but I think it closed somewhere over here. So that's one deal. So that's one hurdle. The next hurdle is the other one I just showed you earlier. I had a question on Home Depot as to what do I expect. I thought this candle here was a little iffy, meaning the exuberance was too big in the morning on the report, and then it closed towards the low. So maybe puts will work, but I wasn't condoning those because I have no faith in that. However, I do know if it loses 115, 114, then it could invite more sellers, so be careful chasing. That was the message. Be careful chasing Home Depot. These might be a little small to see, but listen to my message. Also, Clyde, sorry about that. Clyde had a question about ACN. I don't follow ACN at all. However, he thought that it would be good time to take some puts, I think. But I see that it's putting in higher lows, higher lows, higher lows, knocking on a roof. Yes, you can say it's failed so many times, but if it breaks through that roof, it's going another $10, $15. So let's say 10, 15% upside from here, roughly, maybe a little bit more. But it needs a catalyst. And sure enough, he tells me that there is a catalyst this Friday. So maybe, just maybe, a a lottery ticket if you know the stock. I don't. Towards the upside. This was AutoZone, also a question. They asked me, what do I think of it? High price stocks, like $670. You'd think that you can trade it via credit spreads. You can't. One observation I have, it always likes to revert to the mean. You see, this is the mean that, the regression line, I should say. It always likes to come back to it. And from wherever it is, even that little tiny hole right there. So now it's so far higher than there. But who's to say when it's going to revert, right? So the problem I have with this stock is that the premium I can collect, there's no in between. It's always $10 wide. I don't have a problem with $10 wide, but I do have a problem when I have to step close to the money and have to fight it face on. I don't like to do that. So it forces me to take 90 cents to $1 on each side of an iron condor. So that's way too much reward, which tells me, because that means with big reward comes bigger risk, and that's too risky for me. And look at the moves it puts in very fast, and those are the moves that blow you out. And a $10 wide spread, I'm not ready for that. So that's my observation on AZO, which is AutoZone. Fantastic stock, but company, I should say. They always turn in good numbers, but hard to monetize via credit spreads the way I do them. Okay, this is another slice of AutoZone, a little closer, I think. So, the comment still stays the same. People will start talking that it's a double top, because it popped and here it is knocking. Maybe it is, maybe it isn't. Maybe this was just a peak, somebody pushed the buy button early. I say it jokingly, but sometimes it happens. Okay, so what was this? Oh, Priceline. Oh my gosh. Okay, Priceline. It's right now, it had a bad day, by the way. Priceline down 1% or so. A momentum stock that did not participate in the momentum story today. Why do I bring up this picture? This is like a 10-day event here. Let's see. Yeah, 10 days. These are 10 days. So the last 5 days or so, now it's in the zone where it had easy come, as I call it, ladder. Well, guess what? Usually ladders and chutes and ladders, So is it now going to revert to this level here? And if it is, this is a stock that runs $40 a day for absolutely no reason whatsoever. So be careful if you're long it, and if you want to short it, maybe the put spreads will pay, maybe. But it all depends on the markets. I don't know anything negative about it specifically. I do like the company. I go long it when it gets hammered hard. It's still too soon. Resistance starts at 1200 for Priceline, so it's still too close to its resistance. That means it's still high. So I don't chase it yet on the long side. If I want to short the market, that's as good a short as any representation. So, okay, bad day for the bulls. We'll see what happens tomorrow. I'll update you with the level before the open. Thank you.